Back with closing trades right here on ET now. Tracking the markets, 100 points lower, a lot more resilient as opposed to our global counterparts. But let's take it forward with Akshay Bhagwat as well as Kunal Bothra as to what the charts have been reading. Kunal, hi, afternoon. What is your sense on, the resilience that we've seen today and whether tomorrow is going to be a green day once again?
Yeah, I think even if you have such kind of a day, one red, one green for the index, but net the market breadth is a lot more positive. That will be still taken as a positive sign for the index. What's happened today is a very dramatic comeback for many of the underperforming sectors. For example, other than the banking names, the PSU banking stocks have made a very good comeback. Defense stocks have made a comeback. PSU stocks at large have made a good comeback. NBFCs and not the usual large cap NBFC names, the underperforming ones have made a very strong comeback. So I think what this market is indicating today is that it's opening up the market breadth. And whenever we've seen that the market breadth starts to open up, even if the indices remain into a range, that's still an indication of confidence in terms of market sentiment. So I believe that today's market move, price action for indices as well as the overall market indicates that we are in for decent upside and a more of a trending upside over the next 1 to 3 weeks.
Well, technically, can I say that now there is a scope for the market to retest 23,800? I mean, the dash to 23,800, whether we break it or not is secondary, but there is a case for markets to at least go and attempt it again.
So till yesterday, maybe the case was, maybe 50-50, Nikunj, but today, after this kind of a price action move, I believe the chances are pretty much on the higher side. I would probably peg it at, say, 85 to 90% a high probability that we should be in for a breakout of 23,800 mark, not just a retest.
We've got Siddharth Khemka as well joining in the show. Siddharth, hi, afternoon. What is it that you've been doing today? Buying any pharma, selling any IT, or completely staying out of these two sectors?
Agree with Kunal. It looks like the big event is now behind, and the Q4 results are also mostly priced into the market. So we should see a gradual uptick in the market, and that should be beneficial for a lot of companies and sectors. So the reciprocal tariffs not being implemented, pharma, that's a big positive. So that gives a big relief. It's a sector where India has a competitive advantage, and the non-implementation of tariffs on that sector, I think definitely it makes sense now to go out and play those names which are doing well, which were earlier kind of reporting strong numbers, but there was always an overhang after what they did with the auto sector, that whether and not and if and how much tax they would put on the pharma space. So far, we were mostly focusing on the domestic pharma names or the overall healthcare space. So, for example, companies like Mankind or Max Healthcare. But now with this event behind, we are going back to our top picks within the US generics, the likes of a Sun Pharma, which has a diversified book, both in terms of regional presence as well as in terms of product portfolio. We think that's a positive step. So a key overhang removed. We are definitely positive on pharma from here on. In terms of IT, I think the overhang will still remain for some time because there is no first level order impact. The impact is mostly the second level order impact because of the expected slowdown in the US economy and the discretionary spends. I think Q4 numbers post that we could see a lot of companies coming out with a lower guidance, or maybe because the near term would be a lot uncertain. And in that environment, it is better to stay away from IT and look at a lot more domestic themes. Again, companies in the consumption space after the budget have picked up. Last few years, we saw the capex theme doing well, but we believe now this year the consumption theme could do better. Because of the increasing demand, focus on domestic markets. Raw material prices could come down because of what is happening globally. The slowdown in economy could lead to some of the commodity prices also coming down. That would be beneficial for a lot of these sectors and the raw material prices coming down. Plus the improvement in demand because of the higher spending, lower interest rates, increased liquidity. So I think that's the overall setup that we are looking at.
Akshay, hi, afternoon. Let me come to you on the charts. Tell me, does it seem like this move in pharma is going to see a follow through in the days to come?
Good afternoon. So yes, pharma did show a strong positive gap up start to the day, but somewhere the gap up gains have been booked into. So the momentum, although the news factor was supportive, is not still with the pharma pack. So I believe still it may take some short time to build a base before it moves up. So my thinking is maybe 1 or 2% down is where you get some stability in this pack, because right now it is more of a banking which is drawing the limelight. The money flow is chasing the banks. So pharma will have its next round of rally. Yes, definitely positive on pharma, but if you were to buy and hold from a 10 to 15 day perspective, then pharma should generate returns for you.
Lots of voices on tariff, what it means for India, what it means for rest of the world. Is it a victory for India, or this is still a moving part? So here are some voices who from N. Jayakumar to Ramesh Damani to Sandeep Tandon on what their thoughts are about the tariff impact.
US market has still not bottomed out, and particularly Nasdaq has not bottomed. So anything related to technology basket or the which is sentiment linked with the US market should be over 3 years, 5 years perspective. Then trajectory for dollar index is clearly down. I think dollar index either has already peaked out or has potential to peak out in 2025 itself. But if I have to look at from a very near-term perspective, despite that DXY has corrected yesterday, I still believe DXY and global yields, what we have to watch very closely. It has potential to spike from the current level, because when nobody expects that, and that's the time reversal happens.
To the extent that specific sectors have been exempted, it clearly shows the shortages that exist in those products, in those sectors. Whether it's pharmaceuticals or minerals or any of these, the US is in serious short supply. And there could be a lot more damaging impact it could have done had tariffs been imposed on these. At the very least, it could have been disrupted, already is, by the way, for the average US consumer. I think India will be a big beneficiary of money coming back into these markets. And in that, the sectors like pharmaceuticals and to that extent, even IT services will actually stand out.
Probably see, starting with the US, inflation tick up. Already there are signs of producers looking at input and output prices and saying that their input prices are rising and therefore they'll have to push on some prices. Already we're beginning to see some degree of tightness around the immigration measures pushing up home construction prices. Assuming the Fed can do what the Fed wants to do, not what Trump wants them to do, then the Fed is going to be very likely to remain on the sideline, but perhaps start doing significant tapering of quantitative tightening, because in times like this, there is significant additional need for liquidity globally and, of course, in the US.
While these tariffs are a big sentiment dampener as far as the whole world is concerned, as far as India is concerned, I'm more worried about the result season and the consequent earnings estimate downgrade that most of the sectors are likely to suffer. You will see bilateral and multilateral trade agreements within the Asian bloc, maybe, the India-China trade agreements, which have, kind of long been postponed, long been on a back burner. They would actually, possibly improve.
I think China seems like a big loser right now, but China is already building the capability to take on America. And it as might seem like heresy and might seem like too fast pronouncement, but we could see the rise of China in the next 20 years to take on America as a rival. I think clearly in terms of what they've done to their economy, in terms of technology, in terms of trade, they're now trying to match America, and America is not understanding. The fact that they've got DeepSeek out there suggests that they've made very rapid advances in chip technology, very rapid advances in artificial intelligence, which has been America's growing point. So I think Trump is overstating his strength. Somehow I do have exposure to technology, and they are down, as you correctly pointed out. But I think it's a fairly rigorous sector for the next few years. So I wouldn't be in a hurry to get out. I think they'll do fine. I think the whole world runs on software, and you kind of get that processing power in India, the GCC capability in India. So it is hard for me to see the sector going through a very strong recession. There's probably a more of a knee-jerk reaction.
Siddharth Khemka, everybody was of the view that tariff, when the clarity comes, that's a relief point for the market, and then move on. So is it time to move on now? Start talking about RBI, let's look at earnings, let's look at quarterly updates. Do you think from an Indian market standpoint, is tariff an ongoing saga or it is passé now?
So I think because if you look at it, it could be an ongoing saga. But I think going forward, what the Indian government standpoint has been that they would look for a negotiation rather than a confrontational standpoint, which a lot of other countries have taken. So from here on, I think only a trade settlement, and that could be a positive news flows as and when both the countries decide, if India decides to lower taxes, some of the taxes on US, and US also relaxes those taxes on India. I think from here on, it could be only a positive development on the tariff front. So definitely a lot of focus now will move towards RBI, what it does, or how, or what its outlook in terms of the interest rate cycle going forward. There is a big quarterly season coming up with the year end. So a lot of companies will come out with their guidance for next year in this volatile environment. That will be something of very key importance for the markets. I think definitely a large event has already played out and factored in the price. Yes, 26% may be a bit higher than expectation, but the comforting factor is that a lot of other competing countries are taxed even higher. So to that extent, our competitiveness remains a little better off compared to some of them, the likes of Vietnam or in Indonesia, Thailand, Bangladesh. I think we are much better off compared to them. Plus the engagement that our government is doing with the US government, it is only going to lead to some settlement, because clearly Trump is looking at deals and it doesn't want to continue with those tariffs for a very long time.
Mapping what the markets are currently at, because across the board you are seeing some amount of reaction for asset classes. Crude has taken a fall. Brent is now at $72 per barrel. NYMEX currently sub that $69 per barrel mark. Silver also, by the way, is down about 5%, and that's the price action for gold as well, which is currently lower by about 0.5% or so. I think the big indicator is copper. That's where the panic perhaps is. Not a very deep correction, but it's down about almost 2.5%, and that's pretty much the price action for other metals. Like a platinum as well as palladium too, because that's where also you are seeing a bit of a dip down coming in. Europe continues to see a crack. CAC is the deepest knock right now, which is down about 2.5%. The FTSE MIB lower by nearly about 2%. It's an over 100-point knockoff coming in for the FTSE too. It's clearly been us and China which have been the most resilient of the lot. But Siddharth, what's your sense about flows? Do you think the flows that have just about come back to India markets, will they remain intact, or is there a concern around it?
So, Aisha, I think the setup looks positive from here. The way earnings outlook will be a key factor. Plus, a lot of these emerging markets, and we clearly saw that in terms of the reciprocal taxes that have been implemented. India is relatively better off, and if we are able to negotiate some of these terms, trade deals, and get this down even further, definitely it is advantage India. Whatever flows went towards China, I think they will have to have a rethink. And with the current valuations, I think it would only improve from here on. So definitely a positive view on flows going forward.
I just want to go back to China. I want to look at IT, I want to look at banks, and I want to look at cement. Why China? Because China is where the tariff imposition is high. China is China's US biggest trading partner. The trade deficit between China and the US is large. Tariffs have been rolled out on Mexico, on Canada, and now in China, but Chinese market is saying time to move on. I mean, yes, US is important, but it's not the end of the world because China itself is a large economy. That's the message from the market. Banks are moving higher because the Q4 updates, whatever has come out so far, I mean, I remember reading from AU, I remember reading from other banks like IDFC Bank, they've been impressive. So ever since those updates have come out, the stocks have started marching higher. IT is where you would say that it's difficult to say that what happens in the near term, because now there are two levers moving against IT. One, the currency depreciation is definitely getting over, that tailwind is behind us. AI and future business will definitely get impacted with what is happening, A, at an innovation level, B, at a business level. And that is the reason why today anything which has got to do with IT services, IT exports, even though tariffs have not been imposed, is down now. Akshay Bhagwat, how much more for IT stocks to fall before they bottom out?
Yeah, absolutely. There is a lot of shorting bets which is prevalent in the futures and option segment as well. And really, if you were to look at the weightage of in the IT pack, majority of them still have a negative setup. The results are around the corner, so probably you might have a relief rally kind of a dead cat bounce in some of the IT names. But really, sector per se still, if you were to pick a downside percentage wise, I think still 3 to 5% downside in the index can be anticipated from the current levels.
Kunal, wanted to get a sense of what your trading bias is. Has been rather today. In the morning, of course, you were talking about Concor being one of the strong charts. What trades have you executed, both long and short today?
So more on the long side, of course, Aisha, and I've looked at a lot many, NBFC names. For example, Poonawalla FinCorp, Geo Finance, AB Capital are the ones which are looking fairly attractive. Then we've looked at, the power financiers, PFC, REC. I think both of these stocks have looked, quite strong on the charts, and I believe that the initial dip was something which I think made the risk reward a lot more attractive. Then you have BHEL, something which I've been bullish on also earlier. That's a stock which I believe is good to go for a decent upside over the near to medium term. The stock has consolidated quite a lot. My expectation is that the stock could come back to that 240 to 250 range over the near term. So these are the few odd names which have been bullish on. And my expectation is that going forward, you would probably see a much more broader based and the underperforming names from each respective sectors, whether it's defense, whether it's the PSU themes, PSU basket, PSU banks as such. I think all of these stocks should start to perform very well.
Right, okay, that's Poonawalla FinCorp looking interesting right now. Some of those NBFCs have done well. Nikunj was flagging off, the Q4 updates. And for BOB, it's been very strong. The global deposits have seen an uptick of nearly 10.5% and an uptick of 5.7% on a sequential basis. The global advances as well have risen about 13% on a year-on-year basis and an uptick of over 5% on a sequential basis. For Bank of India, the update also has been very strong. A 13% uptick in their advances. And 10.6% of a growth coming in their deposits. AUSFB, again, very strong there. And that's been the case with IDFC First as well, wherein the loan book saw growth of about almost 16%. And the deposits as well have seen an uptick of almost about 12%. So that's from the mid-cap banking space. What is it that you're liking? Or is the recommendation still to stick by with the large caps?
So definitely, I think the banking numbers that have come so far have been encouraging, and that only makes us positive on the entire banking space. That is another space which is largely domestic focused, and with the interest rate cut cycle, I think NBFCs are much better placed compared to some of the banks where NIM compression may continue for one more quarter. So I think within the NBFCs, something that we like is a Shriram Finance, Bajaj Finance on the large cap space, Cholamandalam Investment and Finance from the mid cap space. I think overall the consumption credit or the consumer credit space that will start doing better, which is again being reflected in IDFC First and Poonawalla FinCorp. Both are largely focused on the consumer finance space. Plus the vehicular finance is also picking up. So overall, we like that space. Finally, I think with the gold prices at record high, the gold financing companies could also do well with the LTVs improving, and I think more credit demand eligible for being lent with the same amount of gold. And even Manappuram with the management change, Bain Capital coming in, a total reset in terms of the business strategies. I think that is another stock from the NBFC space that one can look at.
Siddharth, give us your top ideas as we unwind the day.
So yes, I think if you look at on the domestic consumption side, we can look at something like a trend. The stock has come down, valuation is looking attractive, and we believe that growth is something that will come by. They have recently announced opening the 1,000 store, so reaching a total of 757 Zudio stores, which is an increase of 40%, and a 248 West Side stores. So I think that is a core growth, and as I said, consumption is a theme that we believe will do well. And we are expecting a revenue CAGR of 32% and a PAT CAGR of almost 40% over the next 2 years. And that should be driven by almost 20% addition in both areas, in both the segments, so West Side and Zudio put together. So same store sales growth plus the space addition will drive this growth. So we'll continue to like trend. We have a target price of 7,350.
Good chatting with you, Kunal. We'll let you as well go on that note. Thanks as always for your time. Let's begin winding up for the day, and we've not done bad given the backdrop that we came into trade with, the fact that there were those tariffs implemented. And it's going to be in effect from tomorrow itself. Persistent, Coforge, KPIT, Emphasis, IT has really taken it on the chin today. And even Dabur, we forgot to talk about that, given that the quarterly updates has been quite weak for Dabur. That stock also took quite a fall, about almost 6%. Is where it's, seeing the loss actually accumulate. Other than that, of course, ONGC, Tata Motors, Bajaj Auto, the auto pack as well fizzled out that a little bit. The breadth of the market was not bad. In fact, if you just look at the F&O pool, it was actually advances which managed to take over. It's a count of 125 to the greens with 96 to the red, and you had the likes of a Power Grid, Sun Pharma, Ultratech Cement, Cipla, Shriram Finance, NTPC, IDFC First, IIFL, JMR Airport, Power Grid. They've all managed to actually hold through quite nicely for themselves. Of course, what's really been at the polar opposites has been pharma at one end, and it's been IT which caved in at the other. But let's see whether this trend remains or not. So yes, done with that Liberation Day reaction, and one can only say that a big overhang got lifted and the markets only sort of breathed a sigh of relief. We'll pick it up again tomorrow morning at 8 a.m. and see whether the rebound in our markets, or resilience at least, stays put or not. For now, it's a goodbye from both of us.